Yo, what's up everyone? It's your boy Looney back with another breakdown, and today are one of those real ones. We're talking about what happens when a stock tanks, and I'm going to use Google or GOGL as an example because it just took a hit along with the others, but I thought it would be good to just single out a single stock and kind of go over how it affects my portfolio and most importantly, what I do about it. Also, quick shout out to the Discord, free to join, and then the premium version includes real-time trade alerts, strategy breakdowns, and giveaways. All links are in the description. Let's get into it. Let me pull up Google so we can look. There are two types of Google. I'm going to pull up, it doesn't really matter which one, the A series. It's not that much different. They're pretty much the same price. So I could do both, but right now we have Google A or GOOGL. And you can see it pulled back hard, down 4%, and year to date down almost 20%. And this is because of just the crash, the tariffs, the overall bad sentiment in the market, interest rates being delayed, CPE coming in not as good, and inflation coming in higher than expected, or inflation not dropping. It's still staying at its highs. So right now it's red. Google is overall red, and it's down on the week. Let's also look 5%. So when a stock like Google dips, I don't panic. I manage risks in a few ways. One is you can sell covered calls. I don't do this on Google because Google's a pretty expensive stock, so you need to have 100 shares to do this. So I would need 100. I only have 2.5. So I can't really do covered calls. You could also do cash secured puts, very similar. You need enough cash to buy 100. But because I don't have the collateral to do that, I'm doing the third option and one of the best, and it actually is a variation, or the other examples are variations of this, and it's dollar cost averaging. So Google is one of my long-term plays. So I'm averaging in a little at a time. So red days are actually opportunities, especially if you believe in the stock. And this is where wealth gets built. It's not by selling in fear, but by staying consistent. I actually was doing this for a while now, and then I held off because I felt that it was a little overvalued, or I felt it wasn't really the good opportunity to do that. I'm going to see where I held off. Maybe I didn't. Let me just check. I might have been continuing. I might be just on and off, but I saw an opportunity recently. So I'm dollar cost averaging back in, and I'm only doing $1 a day. So not crazy amount. And then if we pull up the other Google, GOOG, I'm doing the same thing, $1 a day. So technically $2 a day, and I'm just dollar cost averaging. So I have almost 4 shares total of the two Googles, about like 2% of my portfolio, 2 or 3%. So not a big part of my portfolio, but it is there. And I'm just simply dollar cost averaging, getting that average cost down. Right now I'm at 147 for this one. So obviously less than 155, but I want to maintain this. I want to keep buying when it's cheap. And then if it starts to go back up, either continue to dollar cost average, putting a little bit in, or hold off and maybe take some profits. Probably not. I want to wait till the stock has like 300 per share or somewhere around there, which I don't think will be for a while. Especially for me, I'm okay with that because it is a long-term play. And actually, this is where a lot of traders mess up. They end up panicking at this point. They sell at the bottom and then they regret it later. Me, I am also just zooming out. We could see there's been pullbacks in the past, like in 2022 here, and then right now. Let me pull back up A and do the same thing because this one's been going for a little bit longer. And yeah, very similar pullback here. But especially when you zoom out here, you could see just the gradual upward trend. And you could see that Google is just not going away. So I'm just sticking to my plan. This pullback isn't even the worst one. I believe this one went down 8%, and here it went down 28%. So this is not even the worst pullback we've seen. I'm not saying that it's going to go down or up, but I am aware that pullbacks happen. There are crashes, but in the long term, I am a bull on Google. So just simply putting a little bit of money every day goes a long way. So yeah, red days do suck. They're not fun, but they're also normal. And they're how you separate emotional traders from the smart ones. So drop a comment. What do you do when stocks go red? Are you panic selling or are you actually loading up? I have some cash set aside that I actually might go into more stocks, not Google, but other stocks. Just waiting on the sideline for a better opportunity, even though there is a good opportunity right now. Probably do it next week, and I'll release it to my Discord. So don't forget to like, subscribe, and join the Discord if you want to trade with me in real time. Until next time, peace.